Trust is one of the largest trusts that is exposed to the opportunity in Asia. It seeks to outperform the wider benchmark by identifying and backing companies that we think will lead their respective sectors and verticals over the long term. The trust performance in the last 6 months have been quite challenging, so we have underperformed the broader benchmark, and primarily because we remain quite convicted of the growth opportunities in the region, whereas the global slowdown has dictated a more prudent approach for most investors, where rising interest rates and rising inflation, coupled with the Ukrainian crisis, has given many of the global investors pause from risk taking. And as such, we've seen rotation of capital from growth stocks to value stocks. And given that we are overweight in growth ideas, performance has suffered as a result of that. We'd like to share with investors two snapshots of the portfolio, one by geography and the other by sectors. By geography, our largest position is within North Asia and specifically China, where our absolute weight is the highest. Given the size and importance of the benchmark of China, we are still marginally underweight there. But we like the opportunities that we see there. There is not just demographic growth and prospects that are attractive, but increasingly we find innovation within the Chinese market that we would like a piece of and exposure to. So China is a very important part of the portfolio. With respect to overweights, we are overweight in the Southeast Asian and Indian markets. These are relatively smaller parts of the benchmark, but they give us a good balance to the large exposure that we have in China. With respect to sectors, we have quite a bit in information technology and quite a bit in financials. These are the two largest sector weights for us, and we like the banking space because we can identify quite easily franchises across the region that we are comfortable with. We look into credit and risk management track records of management teams, and we can identify quite a few financial institutions that we like and we would bet on over the longer term. Within IT, there's quite a lot of choice. We have decent representation in hardware services, in the internet space, as well in software services as well. And although we've been taking a little bit of profit from some of these verticals, we remain overweight in those segments.
So from a broader perspective, we have been making 3 key portfolio changes. The first one would be in China. China as a whole this year has been through what you call a perfect storm, and we see a strong sell-off in the market. And as a result, valuation was looking pretty attractive despite the fundamentals longer term for China. So what we have been doing is we have been adding a bit more in the China internet space, where it has been punished by the stock market on what we think are less fundamentally driven reasons over the long term, and that we have been using the sell-off to be adding to some of these names. The second area that we have been adding would be in the ASEAN space. So Adrian talked about how we remain overweight this space, and we have been adding more as well during this period. And the main reason behind that is really because we continue to see attractive reopening opportunities within the ASEAN region, particularly in places like Indonesia as well as Singapore. In Indonesia, for example, as a whole, vaccination pace has been behind that of developed countries, and therefore, as a result, the pace of economic reopening have been slower. And therefore, today we are still within that, seeing and enjoying that reopening tailwind in Indonesia. The third area that we have been making changes would be in the information technology area, and particularly within the semiconductor area. So while we continue to have a large exposure to this part of the growth sector within the portfolio, what we are seeing is that we are increasingly getting more concerned about the demand risks as global growth starts to slow. And therefore, we have really gravitated towards the highest quality names with the best earnings resilience within the technology sector. So overall, what we have been doing is to really take advantage of the various market sell-off in the short term, using that to add to something that we'll like over the long term and improving the earnings resilience of the portfolio. So we have 6 future themes for the trust, and this is driven by the long-term structural growth opportunities that we see in Asia. But today we'll just focus on 3 of them. The first one would be in aspiration, and what that means is about consumption and premiumization of consumption. This will very much tie to some of the Chinese consumer plays that we have in the portfolio, but also some of the ASEAN financials that Adrian has talked about that will allow us to continue to capture the growing wealth across Asia for many years to come. The second area would be in terms of going green. And this is really a play on decarbonization and energy transition story in Asia, but also globally. And we are seeing a clear trend of acceleration of the pace of energy transition. And part of that is also driven by what's happening in Ukraine and Russia war as well. And that Asia is known to be the supply chain of the world, and within the renewable space, this is not an exception as well. Asia is positioned equally strongly. So we continue to like the companies within this space for longer term growth perspective. The third area would be in digital future. And here you would have a lot of growth stocks that tend to be unloved today given the growth to value rotation. But we continue to see that valuation is starting to look attractive for the longer term growth opportunities. Within China, this would be the Chinese internet names that have benefited from increased digitalization because of what's happening in COVID. And outside of China, we also see very interesting opportunities, smaller companies in India, for example, that have come to the market. And again, many of these companies have also enjoyed better growth because of the rapid increase in digitalization because of COVID as well. So these are the areas that we continue to see growth opportunities despite it being unloved and quite volatile today. I'll pick one stock from the going theme green, given that I've touched on one just now. And while we all understand the broader energy transition and decarbonization story, and that represents a huge growth opportunities, for us as stock pickers, it is really important to decide, which is the best way to play this overall long-term growth story given the trajectory of the industry development right now. And within the energy transition/renewable space, we quite like upstream supply chain guys, and this company, Longji Green, is a solar wafer manufacturer. They have been the consolidator in the market, and they are also the global leader. So they will be the one that will be leading the decline cost curve, bringing the cost down, and that will help to increase the adoption of solar renewables within the various countries globally. The other part that is also pretty interesting is also because they are a market leader, they are able to consolidate the market and they are able to grow along with the industry, and industry is at the highest growth pace right now as well. So a pretty straightforward story to play the energy transition story in our opinion.
Yeah, I think I'd like to remind our investors that as a region, the region remains very dynamic with an increasing amount of growth opportunities that used to be driven primarily by the demographic dividend, where a rising amount of the middle class will be expanding and consuming more products and services over the longer term. But increasingly, we are seeing innovation as well. Just like what Pruksa said, some of that's appearing in the green space, some of that is appearing in financial services as well. And what we're finding is increasingly progressive companies that we can back and we'd like to participate with, that we think that over the long term, they stand a very good chance of outperforming their peers. And although we are mindful of the Ukrainian disruption and interest rates pressures and inflation, we must make sure that we don't react to the volatile markets and undermine or underexpose ourselves to some really exciting stories for the long term. Rest assured, we will see continued volatility in the current macro environment, but we try and look through that and identify companies that we can back for the long term leaders for the portfolio.